Additional compelling themes that we discuss in our first quarter newsletter include healthcare, energy, and copper. And touch base quickly on copper because it's very timely here and very interesting. Copper is making new all-time highs. And the reason for this is basically economics 101. It's very simple. It's just supply and demand. So there is a growing demand for copper globally due to the global electrification theme, due to electric vehicles, due to the expansion of the electrical grid around the world. As a consequence, the price of copper is moving higher. At the same time, the demand is increasing for copper. There's also continued supply constraints. A very recent example of that is the Cobre Panama mine, which is a mine owned by a Canadian company called First Quantum Minerals. And the Panamanian government recently forced First Quantum to close that mine due to protests and concerns in terms of environmental regulations in Panama. And this isn't an isolated incident. This concept of NIMBY, or not in my backyard, it's a concept that is prevalent globally, and there aren't a lot of countries in the world where it's easy to build infrastructure, whether that be pipelines or new mines. And so we see that trend prevailing for the foreseeable future, which means that even as copper prices increase to try to balance supply and demand, the lag and the delay to bring on new copper mines means that copper is probably going to have to go an awful lot higher. So we're very excited about that, and we have direct exposure to copper in terms of both our U.S. portfolio and our Canadian portfolio in terms of the stocks that we own. The energy theme is also closely related in that I think the world is coming to the realization that we're going to continue to be using oil and gas for a long period of time. And again, we're in an environment where whether it's environmental groups or regulations, that there's a lag time and a lack of investment in terms of bringing on new supply for oil and gas reserves globally. And this is likely going to mean higher prices long term. In addition, oil and gas companies, because they've been underloved for a long period of time, are very cheap, and they've sort of found religion in that they are buying back their stock and increasing their dividends and actually not putting more money into the ground in terms of finding reserves, because the market has not the market hasn't rewarded them for doing so. It's a closely related theme to copper, and we feel very good about the high quality energy positions in our portfolio that are increasing their dividends, buying back shares, and creating a very nice risk adjusted return for shareholders.